These are the institutional traders. These are the ones that are bringing in the billions of dollars worth of stuff that we keep seeing. Who the hell is bringing it into COMEX? And so it hasn't filtered its way down through the ecosystem yet. So it's coming, but we're very early still in the game. And it's hard for you all to see that because silver's at 50, but it should be a whole hell of a lot higher. If you just take gold right now at 4,100 and divide it by 45, which is right smack in the middle of where it's been for the last 150 years, the gold silver ratio, 4,100 divided by 45 is $91 an ounce. Now, if you put silver at 91 bucks an ounce right now, it would be pretty much on average where it's been my entire career on a ratio basis. Right. In fact, I was listening to Keith Neumeyer, and he was talking about many of the silver companies are actually turning into gold companies, that they're buying gold mines because it's so hard. They are the purest silver mining company out there. Roughly 50% of what they accumulate is silver. It's becoming hard to be a primary silver miner because silver is depleting in nature. And it's, this is why I think it's critical. The same organization, the Geologic Survey branch of the U.S. government that classified it critical, is the same one that came out a couple of years ago and said, it could possibly be the first element actually struck from the periodic table. As crazy as that sounds, they said this because it is depleting. It was 16-to-1 ratio gold to silver for 5,000 years. Geologically, now it's 7-to-1 because it's found near the surface. And to Keith's point, there are very few companies out there mining just silver.
That potentially could be the worst thing ever. And I don't even know if you realize why. Sagar Khandawal, he's the analyst at UBS, says he sees upside of 4,700 in Q1 of 26. And that next year, due to the falling real interest rates, a weak dollar, rising government debt, and all the
let me be honest. All these so-called experts have been revising their numbers upward and upward and up. At some point, we just have to agree that they don't know shit, and they continue to revise their numbers upward to maintain relevancy. Now you got Bank of America saying $67 silver. Where were they last year? Where were they? It's the same thing. But they've been revising it from 2,000 to 2,500 to 3,000. How about just stop projecting? And, I get your point, but I think these bankers that are part of the cartel, they're telling people just enough, but not enough to. I don't think they know what they're talking about enough to make these kind of projections. I just don't.
No, I very often don't say analysts. I say analysts.
Yeah.
Because
to me, the bigger thing is Michael Hartnett saying 25% allocation, or the CIO of Morgan Stanley 20%, or Jeffries. They say 6,600. They are, at least to me, by next year, more. I think they have a better understanding. They were primary distributors for all the world's mints. They were in the gold market heavily, but even still, I guess I'm being biased. But when you see Jeffrey Gundlach say 25% allocation to gold is underweight or not overweight, these are different types of people speaking to a different strata of people. And to me, that has far greater weight than some guy at UBS saying 4,700, because he was probably saying 3,700 a year ago.
Yeah. I'm going to put up a question here, and I'm not going to look at you. I'm not going to mouth anything to you. Nothing. Everyone can see that we're not cheating. I want you to answer on the count of three.
I feel pressure.
Well, you know it because you taught me well.
Oh, okay, good.
Okay. So here's the question. And this is going back almost. I'm going to read it.
Okay.
But this is going back probably 3 to 4 years ago.
Yep.
Okay. I used to say to you, hey, Andy, was there anything other than silver now at $50 or anything that is the same price today as it was in 1980? So on the count of three, I hope I get this right. We'll both say it?
Yeah.
Okay. 1, 2, 3.
Sugar.
Coke. Well, I was going to say coca. Yeah. I thought it was cocoa.
No, it's sugar. And I haven't looked. So that happened.
Clearly, I'm not doing very well.
I did. Yeah. You failed. I was on a podcast with Chris Marcus and said, I'll give someone a silver eagle if they can tell me any commodity or any asset that was trading at the same price as
40 years ago.
Yeah, and the guy, I actually had to give him a silver eagle. He said sugar, and he was right. I don't know where it's at now, but
right.
By and large, anything that you talk about, there are very few things that you could think of that
or at the same price 45
not
years
even
ago.
even remotely close to the same price.
Yeah.
you
And
know?
again, when we look, and then if we were to adjust for inflation, which we don't at this point, it is substantially lower than it was back 45 years ago. I mean, if you
look at gold. Gold's 5 times what it was
Yeah.
in 1980.
Yep.
The previous peak. Silver has been held back. And the question I've always said, posed to people, that what Roger Bald Guy Money talked about was why. It wasn't so the bullion banks could make easy profit. It was, in my opinion, something much deeper than that. And that's why I went down the rabbit hole of the military industrial complex and the need for high-tech silver, or silver to make high-tech weapons. And it's not even about the cost. It said that the cost would attract speculators and would attract sovereign governments, and everyone would rush. The spotlight would be shown on it. It's not about it costing more money to build a bomb or a F-35. It's that it's competition for a very small amount of silver that is depleting. And now there is realization around the world that these countries are now coordinated, sophisticated. They understand what's happening, and quietly everyone is trying to scoop up as much as they can, take it from the exchanges, stand for delivery. Quietly, but it will
It's
turn
becoming
into
a
a
lot
sprint.
louder.
It will turn into a
that's for
sprint
sure.
at some point. And then you look at it this way: you have 3 factions that will ultimately battle against each other. You have the industrials, Tesla, Samsung, and Sony. You have the solar panel companies. You have the hedge funds that say, "Oh, look at this! It's a tiny little market cap. Money flows into it. It's going to explode. It won't just go higher. It is such a tiny market cap that it will explode." And now you have the governments putting a floor underneath it and buying themselves, to your point, minimum of 50 million ounces a year, if not more. And China limiting exports, and the LBMA running out of stock. I mean, the whole thing is crazy. I mean, the potential is massive. And I got David Jensen coming on my show next Wednesday, who is the LBMA expert. I think people should go check that out.
I love reading him.
I read everything he puts out. To sell, as far as I'm concerned, it's more about wealth preservation and transfer of wealth than it is about profiting. And I think that's the thing people need to put into perspective here. You don't listen to what we're talking about so you can make massive profits. You very well may in dollar terms. And if you've been doing this long enough, following this long enough, you have. But that's not why you buy it. You buy it to get out of the way of what's coming to the dollar. And I think that is the key to all of this. And, you look at a company like Tether, who is taking all of their profits that they get when they issue these stable coins that are backed by treasuries. That interest is not transferable. What are they doing with the interest? They're buying gold and Bitcoin. And in fact, they have more gold now than they do Bitcoin. The numbers just came out for their third quarter, and they have over $12 billion worth of gold. And they were, as a company, at the Beaver Creek Mining Summit, where they're talking directly to the miners. So they are buying hard assets with the profit that they get from the stablecoin issuance and the treasury spread that they get to keep. And that's all, in my mind, part of design to devalue the dollar. The worst thing that you can do if you are wealthy is sell your gold for a profit and go back into dollars. You could reallocate it, but it's not time to reallocate it. What assets are truly undervalued? Not real estate, not equities, not bonds. What assets are truly undervalued? And I would make the argument silver for sure. And again, you could argue gold is too, because price discovery has never been allowed to happen due to the Western suppression of it. So, it's a tough thing for the very wealthy people. It's tougher for them to keep their money than it is to make it. And I think selling it for a profit is the last on their list at this point, as far as their gold is concerned.
And as Andy always says, those who hoard cash are destined to go broke.
It's true.
Yeah.
It's only lost 8, 9, 10% against the stupid dollar index, a basket of horse crap currencies, but it's down 70% against gold, 60% or silver, 60% against gold. The real barometer, the real measuring stick, gold and silver, it's getting creamed, and it was down the same amount last year too. So when you measure the dollar in terms of gold, when you measure anything in terms of gold ounces, everything is falling in price. Everything. Anything you buy, but you measure it in dollars, it's all going higher. That is the myth of the dollar index. And people don't see how much the dollar is slipping when measured against a basket of ridiculously awful currencies. As Doug Casey says, it's the it's the prettiest mare in the slaughterhouse. But there's a tremendous growth potential in the mining sector, but it's different allocations in your pyramid. The base of your pyramid is gold, silver, paid for real estate,
Foundation,
cash.
right?
Yeah, the middle portion would be very short-term treasuries throwing off a yield, or what are they called? Utility stocks paying a dividend. The top 10% is your crypto, is your
It's your speculations.
your mining shares,
Yeah.
but you can make more money on that top 10% than you would on the whole 90% below it, but you're not risking to speculation.
Correct.
So income and whatnot is important, but that's not why you own gold and silver. And that's the part I want people to understand. And maybe some people don't have the luxury of that, but then you pare down your exposure. That means you bought too much if you don't have the luxury. Buy what you can afford to put away and understand that it's there to protect you from the debasement of the dollar. What you do above that in terms of risk and speculation is fine, but just keep the proper context in mind.
Yeah. Joe Brown wants to know, Andy, where will silver be in 12 months?
Wish I knew. A lot higher than it is today would be my guess. Come here.
Andy very, very seldom puts between 60 and 70. I stand by it. I think that anything could happen where we start to see the $3-4 number. I mean, right now we're less than 20% from there. So, but
it's
again,
amazing how the psychology of price affects us all. It was sad when it was below 50.
Yeah.
Now there's optimism and it's excitement. This is the smart people call it painting the tape, and they paint the tape to screw with your emotions. And they understand how to not only shake you from the bull, because the bull wants to take as few along as possible for the ride, but they also know how to get people irrationally exuberant and to jump in and then pull the rug. For some, this has been a game they've done for a very long time. This game is becoming harder to play because of the physical demand at that level where no one stood for delivery. Now they do. So to manipulate the price downward is very dangerous. But my point is that the emotions, this is going to be a very emotional ride. It'll be volatile. And there's a whole wave of investment theory, Kondratiev wave, Elliott wave. It's all based on human emotions, greed and fear. Try to balance yourself out and see the big picture. Don't get all crazy when it goes down, and don't get all, spacey when it goes higher. Try to be as even keel as you can and look at this pragmatically. The dollar's dying, and I believe this administration knows that, and they're doing all they can to siphon whatever isn't nailed down while they still can. And that's part of why the stablecoin bill will allow them to do that. I just think it's happening, and you have to brace yourself for the wild ride ahead. It'll be a whole hell of a lot higher. You have to go down now. But I don't want to pick a number because it would just be guessing.
And listen, at the end of the day, you have to look at these downturns. If you believe that both silver and gold are undervalued assets relative to the dollar and other assets out there, when these dips happen, use that to your advantage. I mean, for me, I almost wish silver was back to under $20.
No, you don't.
I do.
You don't.
I do.
I mean, you can buy a lot more.
Right.
But
listen, I like to accumulate. Where else am I going to put my money?
I don't know. It freaks me out that a tube of gold Eagles is over $80,000 or almost $90,000. It's just absolutely crazy to me. But, who's to say it doesn't go a hell of a lot higher? James Rickards is saying 24,000.
Then you know what we're going to need to start doing? We got to start making some new packaging for Eagles and only make them 10 per tube. Because 20 we can't even insure at this point on a full package at this point.
That's crazy. I mean, it's crazy.
Nuts. It is.